Let's tackle one of the biggest myths out there, the idea that you need a ton of money to start investing. What if I told you the most important investment you'll ever make has almost nothing to do with how much cash you have? Today, we're going to break down exactly how to start, even if you think you've got nothing. This right here, this is the single biggest thing holding people back. Investing is not some exclusive club for the wealthy. The real key isn't the size of your bank account. It's about having a smart strategy and, more importantly, the right mindset. I want you to think of your very first investment. I don't care if it's $1, $5, or $20. It's not about getting rich. It's a training session. You're building the discipline, the muscle memory of an investor. That habit, that's the real foundation, and it's worth way more than any tiny profit you might make at the start. All right, so the big question, where does that first dollar even go? Let's dive into the simplest, safest, and most accessible places for any new investor to begin.
Okay, so the most common recommendation you'll hear is something called an index fund. The best way to picture it is like a big basket of fruit. Instead of trying to find the one perfect apple, you just buy the whole basket. That way, you get a small piece of every apple in the orchard. This idea is called diversification, and it just means one bad apple won't ruin your whole investment.
Let's make that even clearer. Imagine you could buy a fund that tracks the entire market of a country. You're not just betting on one single company to do well, you're betting on the long-term growth of the entire economy. See? That's where the real power and safety of an index fund comes from.
Now you're also going to hear the term ETF, which is short for Exchange Traded Fund. Don't let the jargon scare you. The easiest way to think of it is just an index fund that you can buy and sell throughout the day, just like an individual stock. But for you as a beginner, here's the only thing that matters. Both are simple, low-cost tools designed for long-term growth. They're perfect starting points.
But what if you have, literally zero money to spare right now? Or maybe you're not even old enough to open an investment account? Well, the single most powerful investment you can possibly make is in yourself. And this idea seriously can completely change your future.
Just think about it for a second. Learning to code, getting better at a language, mastering design, figuring out AI tools. These aren't just hobbies. Every single one of these skills is an asset that dramatically increases how much money you can earn later on. You're building the foundation to have way more to invest with down the road. This is investing.
So how do we actually turn all this knowledge into a real strategy? Now we're getting to the core of it all. The simple, actionable steps to build an investor's mindset. And the best part is, you can start practicing these today whether you have money or not. This is it. This is your 4-step roadmap. It doesn't look complicated, but believe me, it is incredibly powerful. We're going to walk through each one, because mastering these 4 ideas is the absolute key to building real, lasting wealth. Step 1, start small. And I mean really small. That initial amount, it absolutely does not matter. Whether it's a single dollar or even just a few cents, the goal here isn't the profit. It's the psychological win of just getting started. Because here's what that $1 is really doing. It's training your brain. You are teaching yourself to delay gratification, to put your future self ahead of what you want right now. You're building a pattern of consistency, and you're shifting your whole perspective to the long term. These are the mental muscles of every single successful investor. Step 2 is what I call the golden rule of personal finance. Pay yourself first. This means that before you pay a single bill, before you buy a coffee, before you do anything else, a piece of every dollar that comes into your life goes straight to your savings and investments. It has to be a non-negotiable. And step 3 is absolutely crucial for protecting all your hard work. You have to build an emergency fund before you start investing seriously. Think of it this way. Your savings account is your shield. It protects you from all the unexpected stuff life throws at you, so you never, ever have to sell your investments in a panic. Your investments? That's your sword. That's for growth. Finally, step 4 is all about your mindset. Real investing is slow, it's patient, and honestly, it's a little bit boring. And that is a good thing. It is not gambling, it's not a get-rich-quick scheme, and it's definitely not about trying to perfectly time the market. It's all about consistency year after year. Okay, so now we know what to do. Let's really quickly cover what not to do. Knowing these common traps right from the start is going to save you so much stress and probably a lot of money down the line. Here they are, the 4 biggest traps for new investors. First, falling for the whole get-rich-fast thing. Second, trying to be a hero and pick the next big stock. That's just gambling. Third, investing without that emergency fund shield we just talked about, and last, investing money that you know you're going to need in the next few years. Just avoid these at all costs.
And let's just hammer this point home one more time. Why is trying to pick individual stocks such a mistake for beginners? Well, when you bet on one single company, you take on all of its risk. But when you buy an index fund, you're just betting on the entire market to grow over time. It's a much simpler, steadier, and frankly proven path to success.
So as we start to wrap up here, I just want to tear down any final walls that might be stopping you. Forget the idea that you need to be some kind of finance wizard with a huge bank account. You don't. That is not what this is about.
When you strip everything else away, this is it. This is what you truly need to get started. Number 1, start small, whatever that means for you. Number 2, be patient. This is a marathon, not a sprint. And number 3, above all else, stay consistent. That right there is the real secret.
So I want to leave you with this final thought. The question you should be asking isn't, how much money can my first dollar earn me? The real question is, what will my first dollar teach me? What will it teach you about discipline, about patience, and about who you want to be in the future? What are you going to let it teach you?